Good morning, everybody. Welcome to the Flow Show, Monday, the 19th of January. Here we go for another week, and already getting off to a bit of a spicy start. Mr. Trump throwing some grenades around once more, keep us all on our toes. We'll talk about that shortly. Morning, K-Man. How's your weekend?
Morning, Ryan. Morning, everybody. Yeah, the weekend was all right, mate. Thanks. The weather not great, but yeah, it was an okay weekend.
Yeah, good. And I trust all our viewers had good weekends as well. Right, let's get going. I haven't even got my calendar up to date yet, so let's do that quickly. Oh, come on, it's not even working. There we go. Where is it? Custom dates. There we go. What's the date today? 19th. Bingo, bango. Right, because we had some data out of China the early part of the morning. GDP data, which they surprisingly hit their year's target. 5% growth is what they targeted for the year. They've managed to hit that with quarter growth up 1.2%, and that year-to-date number coming in bang on 5%. They also had slightly better unemployment rate than expected, but stayed unchanged over the prior month. Industrial production had a nice beat as well. So overall, ticking along pretty well. The Chinese economy, well, as we said, they've been up, they've been down, but they may still manage to hit their target at the end of it. Over in Japan, there was a little bit of a wobble. We had industrial production coming in slightly worse than expected. Also had machine tool orders. Let's see if they're up there. There we go. Coming in much worse than expected for November, down 11% as well. Year on year down 6.4%. So a little bit of a wobble there as well. Some of this data has been a bit up and down, as you can see. You know, we had a 12.5%, 7% gain the month before. So quite volatile data. Further electioneering, as you can imagine, out of Japan as well. The CDP Secretary General Azumi says cutting the sales tax without funding is just populism. The Komeito Secretary General Nishida says he's aiming for zero food sales tax using government funds. Earlier on this morning, the joint party now between the two of them, the CRA, said that they aim to curb excessive yen falls. Now, sales tax, which is usually called VAT most other places, although it is more consumer goods related as well, is something that comes up all the time in Japan, particularly with elections and that. It's a big political football, shall we say. PM Takaichi was talking about it as well. Firstly, she said she's calling the election for the 8th of February. She also said we'll move away from assuming extra budgets, and she plans to suspend the sales tax on food for 2 years. So there you go. We know what is becoming some of the big election pledges, what they do with sales tax and also FX as well. She also said she will take appropriate, or a party will take appropriate action on FX. We'll keep an eye on speculative FX moves and is ready to take the necessary action. Bank Japan survey saw 86% of households expecting prices to rise in 1 year's time. So those inflation expectations still going the right way for the government and for the Bank of Japan. Again, a lot of people knock expectation surveys, particularly when, you know, the likes of the US, Michigan, consumer sentiment, that sort of thing. But it does tend to cause people to move in that way if they're expecting prices to go up or down, hence why it's so big in Japan for the fortunes of the government and the BOJ. Kay, the political stuff, we're getting more and more, as I said, sales taxes always comes up in these elections, but we're getting a better idea of what they're looking to campaign on.
Yeah, that's going to be the centerpiece of the elections now. So Takaichi was fast enough to counter the new CRA political parties plan to actually they want to abolish it. The LDP wants to freeze it for 2 years. And then, yeah, she said she plans to move away from supplementary budgets. Now that's a bit of a strange one. If you get less money into the government coffers, how are you going to do it without spending more on the other side or giving extra budgets? Especially that she already said that they may even support the companies to keep the wages high enough. So a bit on both sides, as you said. She also found it necessary to talk herself about effects. I think that's uh, just giving us a hint that they know what's going to happen with the yen if they continue to loosen the fiscal policy. But yeah, now we have the confirmation about the 8th of February. Doesn't give an awful lot of time for the opposition to get their act together. Um, and again, CRA is not going to have the necessary votes to have a majority. So I think Takaichi, in my personal opinion, takes the right bet to go as early as possible, seeing her a quite high popularity rate.
Yeah. Now that comment, I mean, you could say that comment on not doing any more extra budgets could be yen positive because if you've done a budget,
Mhm.
that should all be all you need. So
Mm.
doing extra budgets means you haven't done enough in the first place. So moving away from that, I mean, there's two trains. I thought one could say, well, she's going to do larger normal budgets, but then on the other side, it could be yen positive if she's not looking to do extra budgets, meaning
Mm.
she'll do what she wants to do in the first one.
Yeah, definitely. But it is a very high budget that they already discussed about. Also, if you take into account that they are adding extra spending for defense, for instance, that's going to be a pretty decent part of what that normal budget is going to be made of. Yeah, it is no extra budgets, but we know that there's already a few extra stimulus plans in place, which are still going to be there when after the elections as well. Yeah, we will see what the future brings. Again, I mean, I'm not. I still don't think it's time to really buy yen, but I'm not averse to the idea that for once she may kind of succeed in the plans, and that we're going to see a slightly better picture in Japan, especially if she gets the voters behind her, right?
Yeah, yeah, exactly that, exactly that. Right, going just a quick look back at what happened on Friday regarding the data in the US. Not an awful lot out, but we had industrial production out, which came in above expectations, 0.4%, beating the 0.1%. Higher revision as well. Manufacturing also beating, was expected to fall 0.1, came in up 0.2. Capacity utilisation picking up as well, 76.3 from an expected 76 and prior 76.1. So yet again, more data that is showing the US is ticking along still. We had the latest New York Fed GDP nowcast for Q4, which improved to 2.71% from 2.62%. They also put out a Q1 forecast of 2.75% from a prior 2.61%. So GDP still looking or forecast to hold up. Fed Bowman says, given the risks, the Fed should not signal a pause in rate cuts. The Fed should stand ready to cut rates again, given the risks to the labour market. Excuse me, I might need to sneeze. No, it's all right, it's gone. Says the risks to mandates is asymmetric. Job risks outweigh inflation concerns. Bowman is maybe still in the running for the Fed job or not, depending on how you want to look at it. Fed Jefferson says he doesn't want to prejudge a January rate setting decision. Current policy stance leaves the Fed well positioned to determine how much and when to adjust the policy rate. you will be pleased to know they're all on lockdown now, so no comments from those clowns until after the FOMC. Hassett says he expects orders incoming on homes and defining institutional players. Says he's been in touch, or they've been in touch with big banks on credit cards, and that there'll be a new great trump card from banks. He doesn't think legislation will be needed on credit cards. Now, this is all something, if you're trading stocks, you need to keep an eye on, because bank stocks haven't been liking the potential for credit card rates to be capped at certain percentages, and also what's going on in the housing market as well. He also said Trump can reimpose a 10% levy immediately if the Supreme Court strikes down tariffs. We're playing that game again this week. Maybe tomorrow we get something. SCOTUS has put out a message, or messages come out of them saying they will have at least one ruling tomorrow. So we're going to be playing that, hanging on the SCOTUS blog pages and everything else to see if that one ruling or more is going to be this decision on tariffs. Back to Hassett, and talking about his chances of getting the Fed job. He might not get the job, or he might not be in the running, depends. He says from the beginning, Trump and him have talked about whether it's better for him to stay in the administration or move over to the Fed. So that seems like that is an ongoing conversation. He says he doesn't think it's a done deal as far as Trump's concerned about his pick. Besant says we're down to 4 candidates for the role of Fed chair. I'm sure at one point we were down to 3 candidates, but there you go. He said that the best use for Bowman is in her current job, which would suggest she's not in the running, as just mentioned. He said that BlackRock's Ryder was in with Trump yesterday, and that Hassett has one of the most powerful finance jobs in government. He expects a decision on the Fed chair before Davos, as I like to call it, or after they return from that event. So we're still waiting to see what happens. He says Trump is committed to the Fed's independence. Right, over to the big news that came. Trump still sticking it to Europe and to Greenland about Greenland, says, or has threatened 10% tariffs on 8 NATO members, which will come into play the 1st of February, which could go up to 25% the 1st of June. So these tariffs are going to kick in until, apparently, a deal is reached on Greenland. That's got the European lot running around with their pants on fire as usual. They've convened a special session to talk about it. Starmer's been on the wires and this, that, and the other. So once again, Trump's said something and everyone else is running around panicking about it all. We did see a little bit or some wobbles in FX, bonds and whatnot overnight. It is a US holiday today, so that might help with things flying around a bit. Most markets have pretty much recovered back to where they were, or got over the hump at least. Kay, it's the same old story, isn't it? This Trump stuff, threaten tariffs, threaten action, get people around the table, get a deal done.
Yeah, it looks like it. We could have, call it uncertainty in some markets. We see the equity markets are quite a bit lower, right? But I mean, FX. I mean, it's it's hard to take FX one side or the other right now. But the equity markets are suffering a little bit. We see the metals obviously jumping again. It could last until Davos, where he probably will might meet with some of other people involved, at least give a fiery speech about everything, and then Europe may need to take a decision on whether they want to go with countermeasures or not. So I think we're in for another couple of days of wait and see, or how. I don't know. I would be surprised that before Davos he crawls back on it on those threats. Yeah, never say never, right? Obviously, if he does, if he says, okay, we're rather going to negotiate than slap tariffs on those European countries, equity markets will rebound and metals probably come off a leg. But I think the uncertainty will remain until at least Wednesday Davos, and then we will see.
Yeah, I think so. I can see there being a load of sideline meetings happening at this one. But he's due to speak as well, I think, which is
Yeah,
going to be fun.
yeah,
I think you
he's
know what he's like. He likes to start a speech and then veer off every which way around it. So yeah, that's going to be fun and games and
I,
fireworks, I think.
yeah, is the biggest US delegation to Davos ever, if I read that correctly. So I trust there will be a lot of side meetings.
Yeah, maybe they want to take over Switzerland while they're there as well. Stick another
Yeah.
one in there.
Mm.
Good luck. Good luck sailing his new rusty fleet over there though into Switzerland. Good luck with that one. Anyway, that's coming up later on this. When does that kick off? Is that from Wednesday? It
I think
starts
they're arriving today, but
arriving today. Is it?
yeah, the I think the real meetings tomorrow or so. But you know how it goes. Once they arrive, the press will be all over them, and then trying to get comments and etc. I think from this afternoon onwards, we can expect headlines to drop anytime.
Yeah, yeah. Expect that to happen as well. Right, that's it as far as the news goes. Unless you've got anything else, Mr. K.
Nah, no, the rest is. Yeah, the rest is all linked or unhinged. So no, moving on, mate.
Yeah, moving on indeed. Right, a quick look what's coming up this week. Not particularly busy day today. We said US holiday, so nothing out from there. We do have China with a loan prime rate decision or announcement coming in the early hours. No expectation for any changes there. And with that GDP coming in on target, they probably gives them the ammo to hold off. Tomorrow morning, we start getting some decent UK data out. We get the jobs numbers out as usual for what they may be worth, given they're still trying to get the figures correct for that one. A bit of data out of Germany, PPI and the Zoo survey. We'll see how German firms, investors are feeling going into the new year. On Wednesday, we get UK CPI data, which could be pretty important for the upcoming Bank of England meeting, which is early February. So we'll see whether that pushes them into maybe another cut. Get a bit of data out of the UK, out of the US, sorry, potentially. This calendar's a bit funny with its updates at the moment, so I'm not sure that some of this delayed stuff is right. We got some starts and permits last week, I think. Other than that, Thursday we get Aussie jobs, so that will be a good watch. With the RBA taking a bit more of a hawkish line of things, and the market as well looking at potential hike in February. So this is going to add or subtract to that. UK finances. That'd be another watch to see how badly Reeves is doing regarding the fiscal situation. ECB minutes, I don't know why that's showing as delayed. There's no reason why that's delayed. And then we get some GDP data and this PCE data, which is potentially going to be a bit skewy because it's going to be catching up in this number. So there's going to be all the old stuff and how much is in there from the October CPI and PPI and all that sort of thing. So that could be a little bit messy there. CPI data from New Zealand and Japan later on Thursday. And Friday, it's the Bank of Japan, which there's very little expected of a rate move. Let me have a look at the probabilities, but I don't think there's much pricing for this one, Kate.
No, I don't think so, mate.
Do you think the BOJ could put a surprise? I mean, I think if we were trading up in the currency, that might have been the case, but
that would be a big surprise if they go again this time. I would say that I don't know. I mean, now, I mean, I don't think that they will move this time, especially also with the elections upcoming, unless that is a reason to hike. But no, I still think that, and I was wrong, by the way, last week saying that the first meeting of the new fiscal year is May. It is actually April. No, I think that's going to be a better timing to look at what they may do next. I think for now they are going to let that election play out. It would be the real big surprise if they go this meeting. Yeah.
Yeah, I think so too. But never say never with them lot. Then it's PMI day. We start kicking off the flash PMI numbers from around the globe through to Europe and the US. We also get some Canadian retail sales dropping. Michigan sentiment numbers on Friday as well. So bit of data to keep us ticking over through the week. Right, let's have a look at what's going on markets. Do we have Canada CPI today? Yes, we do. You can see it right there, Fred. Canada CPI today. That was heading down the bottom. So, yeah, that's something to keep an eye on today as well. Right, what's been going on? So, as I said, we had a little bit of a move. Those who were up over the open, as you can see there, we had a bit of a gap down overnight in a lot of pairs. The dollar getting a little bit of a bit of a strange one, because when we've had tariffs announced, Kay, we've had this move, but it's reversed pretty quickly, even though the threat's still there. Is that the market saying, oh, we're over it, or it's not going to
Not over it, but maybe the immediate European reaction, or also remembering what happened to the dollar when the first time they announced tariffs. I personally, I'm still there. With what Trump said, those tariffs on some European countries, and then the UK and Norway, you can see that the impact is very limited. People are kind of divided, each side of the whether it's bullish or bearish. I personally, I don't see a huge trade in it right now, because we can there's enough arguments to call it negative dollar, but then there's equally enough to say that, well, Europe try to get their fingers out of their noses, and get moving. So I don't see a positive for either one of them. I understand just coming back to levels where we were before, because this to me, yeah, I fail to see a real directional move in it unless we get some more or some deeper decisions, also, or some harder decisions, really, or decisions taking away further down the road this week, and then perhaps we can see a bigger move. But for now, we could have arguments both sides of the dollar and both sides of the euro, and that's where we are in the middle.
Yeah, I think it definitely looks like an algo reaction function to what we've had historically. Slap tariffs on by the dollar, and then come around to the conclusion that it might be a storm in a teacup again, and see a reversal. So I think these situations, you've almost, I wouldn't say you have to ignore it, but in terms of the time it's happened, very illiquid time this has happened. It didn't last long, and then we sprung back up. I think you've got to take that into consideration. I think, if you got stopped out on a position over something like this, it's one of those things you got to suck up, really, and that's life. Markets can do that sometimes. Just have a reaction like that. But if you were happy with the trade beforehand, there's nothing wrong with putting it back on and having it another go, because we have just basically had that move and gone back to where we were pretty much before anyway, or back in the area. Overall, the euro, it's keeping this downward trend going. I mean, irrespective of how these lows come, you can see it's lower lows, lower lows, lower lows, and the highs are just starting to get lower as well. So we're keeping the trend going, and that's what you've got to keep a focus on. This dollar strength that we have been seeing grinding along, late December, start of the year, is continuing, and that's evident in quite a few pairs. Quid's looking maybe a touch more resilient, but again, we're still making those lower lows. But the recovery off of this one, suggests maybe we've still got a bit of a low area here. I'd still look to that 133.60s area, 50.60s area that we've been holding a couple of times now. If we get another move down there and it holds, that would tell you that this is just a bit of a algo blip, and that level's
they're only pretty much the same. Euro, dollar, cable. Yeah. Even if you look at Aussie, Kiwi, and stuff, they're all had their little open lower, and they're all recovering, and all from levels that may be important or decent enough to pay attention to. So that's the interesting thing to take away, I think, from the Monday morning.
Yeah, especially this Aussie, which basically, pretty much didn't make a new low, held at the prior support. So that's looking a bit more solid. As for dollar yen, it had a little spike up, but 158 is now shown as resistance, putting in a better effort. We messed around a bit here. Then we had we got up in this 158, 1520s that we've seen before. We're back below the figure. We're starting to see a bit of resistance into the figure. So this level's confirmed once again. We've had these little confirmations going on. But I think you've got to be careful of the volatility still in this pair. It had a fairly decent knockdown to 157.40s. And he's, finding it, rallies getting hit more and more, Kay, in this one.
It does. And interesting. When I updated our dashboard this morning on the basic technicals, it is worth noting that 58.20s is showing up as you were showing on your screen. That's quite interesting. And on the other side, we have a bit of a trend line coming in from November, December there, holding it up at 157.40s as well. So that's what we're playing inside, and we now have to wait and see whether we're going to break. I think we will, because the week is whether it be on the dollar side, yen side towards the end of it, but I think on the dollar side we should have enough this week to see if we can go for a break either side of which is in yen terms as a very tight range, 158.20 top side, 157.40s downside. We should be able to move away from that over the course of the week, I would say.
Yeah, very much so. Right, I'm going to pass it over to you, mate, for a couple.
Yep. Okay, so the first one, first one, obviously, we're going to have a look at the metals because they have been on the move again. Sorry about it. Here we are. So gap open, it's starting to be a Monday thing, right? Gap open higher in gold, new highs, but for now it does seem to respect this little channel a bit. On Friday we had this bit of a washout, but quickly reversed again, and then overnight, towards the end of the session in the US, better said, we were back above this very short term trend line, which could be already good enough if we see retracements to keep a close eye on. I'd say though, and I know we're at all-time highs, and I know it's mega bullish in the long term. I don't know. I mean, I'm of the idea of maybe respecting this little channel a bit and see if we can't find a bit of a top there. And then we're talking about 46.90s up into that 47.20s maybe. unless something like more dramatic happens, I could see just consolidation again, maybe a bit similar of what than what we are seeing here. I wouldn't be surprised if, for as long as we don't get more information, that we hop up and down a little bit. We are, after all, at all-time highs, and I don't know how many people will want to really chase it. And seeing a bit similar on silver, also fresh all-time high there quickly, but also here we just hanging around there, and we may just see a bit similar. Obviously, there. Keep an eye on what's happening in geopolitics. If situations deteriorate, Ukraine, Iran, even I don't know, China also. This is going to continue to fly. It's probably will continue to go. I think we are on our way to print a $100 price in silver, especially that on all the setbacks here over the past week we held above this little 86 line, and that's already been a support. We are still seeing, as we saw before. I'm just going to repeat that all those really strong supports we have seen bids creeping in before actually the real strong support. So those supports have been refreshed. So where the support was here, before it was around 50, 55, then it moved up to 60, 65. Then we couldn't get back there anymore on retracements. We're still in the same kind of pattern, same kind of scenario. So I guess we are going to print 100 sometime. For as long as this pattern holds. So for this to start reversing lower, we are going to need to see a break in this scenario, which means for the shorter term, I think a move below 86, then you're going to look at 84. If we get below there, then we are going to see a deeper retracement. But for as long as this similar pattern continues on the more medium term, there's no reason for it to be bearish or to become bearish at all on those things. Okay. What else are we looking at? Ryan already showed mix. That's still very weak, and now we are turning around this 1765, which I highlighted last week. So a bit of a stabilization there. But to go higher, we are going to have to break back above that 84, 87. For as long as that doesn't happen, there's a possibility that we are going to look at lower levels. And then I'm thinking, first of all, these 1740s here. But who says we can't go back to? Am I? No. Yeah. Who says we can't go back to that longer term trend line support, which would come in rather around 1700, right? Or 17, the big figure. So for as long as we are under that zone here, I don't think there's any reason to become more bullish on the dollar mix as it is already right now. Ali, I've seen you in the euro. Yeah, and there may be a little bit going on at 116.30s, but it's that's around here. But is it really worth having a position again? For me, I can't buy either of them, whether it's the dollar or the euro right now. So I'm going to leave it in the middle. Is there anything else you guys wanted to look at before we close it for today?
Don't you have a quick look at those 10-year yields, US 10s? They're holding this break above 420s.
You want to have a look at it?
If you've got, well, if you've got it, you can
No,
show it.
I've got it open. I've got it
Yeah.
open. Let me just go
Yeah.
on the little longer. Yeah, it is above 420s. Um, could be a bit of Hassett effect. Could be a bit of or wash maybe. Or the Greenland stuff, or maybe even Reader. If you look at just quickly, if you look at Wash versus Hassett, Wash would be probably a cutter, but also would like to get the Fed's balance sheet lower, which in turn could be one that negates a bit the rate cuts and which could potentially be a bit of a drag on bonds, pressing yields a little bit higher. I do think the major zone, well, the trend line here around 4.28 is going to attract some eyeballs as well. Yeah, for the time being, we are above 420. Is it going to be enough to support the dollar? Who knows? It's not been a real driver, but we will see if we hold above this 420, whether we could push through a little bit. If you look at what Reader might be represent, I would say kind of closer to what Walsh would be. I think um, they've all went a bit to the same school. Those Reader, Besant, etc. So they may be also one that's looking at reducing the balance sheet of the Fed further. So maybe not outright bearish on whatever happens in the yields environment in the US right now. I'm going to pass it back over to you, mate.
Thank you very much, mate. That's a good start for the week. Get you up and running. You know what's coming. You know what to look forward to. So there should be no surprises in store for us until Mr. Trump pulls something out his hat again, no doubt. Hope you have a great day. Hope you have a great week. We'll see you later. Have a good one.